It's time for stock picks. On the radar today is Premier Group, Blue Label, and the new kid on the JSE, Optasia. Joining me now to break down these counters is Sean Culverwell from Anchor Capital. Sean, thank you so much for your time today. Let's start with the food producer, right? Consolidation, the name of the game in that sector. Premier, of course, dealing with that tie-up with RFG. And I think we should start with a recap of that, discussing the merits of that deal and the current status.
Yeah, so I'm not sure if it's come through on SENS yet, but we got word that the roads acquisition actually made it through Competition Commission, so that approval is set to come through. So it looks like the original timeline of getting the deal done by the end of March looks on track. And it's a deal we really like. So the two long-standing concerns for us with the Premier investment case have been limited liquidity in its shares and then concentration risk to milling and baking, and essentially consolidating roads addresses both those issues. But then also the industrial, route to market synergies between the two companies are very obvious on paper, but in reality, these things are very difficult to pull off in practice.
Yeah.
But we think Kobus Gertenbach and his team have really given us little reason to question their execution. So we look forward to seeing what Premier can do with the consolidated entity.
And talking Kobus Gertenbach, he's kept that balance sheet quite strong. And I'm wondering if there's more runway to do more consolidation, right? Given Premier's low debt and cash strong position, is their next target likely to be another JSE target? I think the last time the results were out, the CFO hinted at even more acquisitions.
Perhaps, but for us as investors, we would like them to, digest this acquisition. It is quite significant in terms of their lives and Rhodes' life, and, harmonizing those two asset bases will take some time. So initially, we would like to see them, extract the synergies that they've guided to the market before they go look for the next target.
Yeah.
But as you said, their balance sheet's looking in great shape. We expect after these next set of results, debt to come down further. And then they're also at the end of their CapEx cycle. So with the conclusion of their Aeroton bakery, so that was now commissioned in November, late last year. So with CapEx, their CapEx spend coming down, free cash flow should ramp up. And that gives them the opportunity to up their dividend policy or even do some share buybacks. But those are very good problems to have.
Right. And that Aeroton, of course, bakery does then open up even further operational efficiencies for Premier. Let's talk about the macro environment here, right? How does the Rand's tear and the soft commodity dynamics, specifically maize and wheat, affect Premier's margin management and I guess overall financial leverage?
Yeah, so I think in the food industry as a whole, volume growth has been so difficult to come by for quite a while now, because soft commodity prices have been rampant over the last couple of years, but we've had some great harvest globally in wheat and maize, and that's allowed their internal cost pressures to come down. So that means they can be a little bit more accommodative on pricing, which should hopefully bring an uptick to volumes, which for them running massive factory would result in some very good operating leverage. And that's what we're expecting. When they opened their Pretoria bakery in 2022, you saw big uptick in margins, and we're expecting the same from Aeroton.
Let's move over to Blue Label. That company shifting its structure after it spun off Cell-C. I think it holds, about 49% of Cell-C at the moment. Is that stake still the main investment draw, or are the other assets within Blue Label what's to look out for at the moment?
Yeah, so we like the remaining business, and unfortunately, over for the last couple of years, the good cash flow generated by their core business have essentially gone into funding Cell-C because of their significant debt load. But now with Cell-C recapitalized and off the books, we can really see how cash generative that core business is, and that's what we really like. It's low capital intensity and essentially acts as a toll gate on a broad range of financial transactions that it facilitates. And essentially for the market now, you've got a cleaner story to value.
Walk me through those core operations, Sean. There was so much confusion around what's left within Blue Label Telecoms after it spun off Cell-C, because there were also those transactions within the spin-off where Cell C was taking over some assets and it was staying with other assets. A lot of confusion there.
Yeah, so it is quite confusing. So initially, with the prepaid company, they were the distributor of prepaid products for the major SA network operators. So prepaid, as I said, products, SIMs, vouchers, and devices. But then with their Siggy Cell business, they also do dispensing of prepaid electricity and water vending. And then they've also got a ticketing business called Ticket Pro, where they do facilitate ticketing for transport and also events. So it's sort of those financial transactions where they just add as the distributor, essentially.
Do they work alongside banks?
Yes, they do, in certain regards.
Okay, that brings me to my next question then. Does Blue Label's fintech operations make it a prime takeover target for a major bank? We've been seeing the trend from the likes of a Capitec, the likes of a Nedbank, really snapping up these smaller fintech players.
Yes, so I think the fintech industry is ripe for consolidation, and especially with the old traditional banks, they've sort of, within their certain lending practices, specifically in the local market, obviously they've got a lot of them have a burgeoning African business, but in the local market, some of their lending businesses are quite mature, so they do need new avenues for revenue growth. And something like a Blue Label, even Lasaka, could be prime takeoff candidate. So yeah, I think you're right there.
All right, let's get on to your last pick. New kid on the JSE, Optasia. A lot of noise around its listing, the biggest IPO last year. Walk me through the investment case there.
Okay, so they've essentially evolved from a niche provider of airtime advances into more of a sophisticated tech platform that essentially enables instant access to credit for over 100 million monthly active users. And we think they sort of their edge lies not in superior access to data, but sort of the ability to operationalize that data at ultra low ticket sizes. So they transform about 5,000 raw telco and behavioral data inputs into as many as 100,000 predictive features per applicant. And that enables automated credit decisions. For the banks, this low-end lending is just uneconomical to multiple factors, and the telcos just don't have the capital for the lending. So Optasia's technology essentially links the bank's capital and the telco's distribution, and that puts them in the sweet spot. So they say they've got a potential to reach 860 million underserved mobile network members. They're only on around 120 million now, 120 million current active users, and that difference signals sort of the runway for growth ahead of them. Nearer term, we think, the short-term catalyst is them publishing their first, maiden results since they've been a listed entity, and that should give the market some sense of the fundamental nature of this business and sort of the growth trajectory of the earnings.
Talking about the growth trajectory beyond, the airtime advances, the microloans, could we see Optasia offer even bigger credit or even offer sort of a buy now, pay later kind of model?
I think they'll stick to their secret sauce. They can't, increase that average loan to the customers, because then you sort of branch into the bank's territory, and the banks are a very key partner for them, and they wouldn't want to ruin that relationship. And so I think they'll stick with what they're doing with the micro lending and the airtime credit advancing, because the runway for them there is so long.
Talking about the partnerships they have with the banks, right? FirstRand, of course, has about a 20% stake in Optasia. Just picking back on the conversation around these big banks snapping up fintech players, does that provide a door of opportunity? Could we possibly see FirstRand picking up a majority stake within that company?
It's early days now, and it was interesting that FirstRand came in very late to disclose that stake. I mean, they already put their IPO filings in. The brokers were building the book to launch this IPO, and in the late hour, FirstRand came through, because I think they realized what the opportunity that Optasia has ahead of them. And I do agree. Over time, if Optasia's execution and sort of if they can show that they can tap into that runway, that they communicate to the market, I do see FirstRand building a more meaningful stake.
All right. Last one quickly there. How do you place Optasia? Is it a telcos players? Is it a fintech player?
Yeah, we see it as a fintech player primarily.
All right. Let's leave it there, Sean. Thank you so much for your time and taking us through those counters. That was Sean Culverwell from Anchor Capital.